So in the last video, we looked at accumulation candles, almost the setup before the setup, which is the manipulation candle. This is where breakout traders get trapped. Price shows its intent before we distribute to higher time frame targets. So let's get into it and look again deeper at AUD CAD. So let's start with some theory. What are manipulation candles? A manipulation candle is a candle that sweeps the high or low of its previous candle and closes back inside its range. So in its simplest format, all you need to see is that the candle breaks above the previous candle's high or low and then closes back inside that candle's range. So it's manipulated its previous candle. So it's the M in AMD, accumulation, manipulation, distribution. So what essentially happens is it's breaking out beyond previous candle range highs or lows, taking that external range liquidity or the money, the stops at those highs or lows. Why? Because institutions are building positions. They need volume to do that. It then closes back inside the previous candle range. So breakout traders or anyone that's getting short or long on the manipulation candle in the wrong direction is now trapped. And what happens? Their stops then get aggressively targeted because more liquidity means more institutional volume. So in reading the price action, we can signal or find the signal for the reversal, which then exposes our higher time frame targets. Targets are what drive our trades. I have to just put a disclaimer in here. Yes, manipulation candles are defined in this way, but not every single candle that breaks out and closes inside of its previous candle's range turns into a manipulation candle. These candles do get run. The reason for that we'll go into later in the course, but for now, in the classic way that accumulation, manipulation, distribution happens, manipulation candles are defined in this way. But in like anything in trading, is not an exact science, so more to come on that. So this is accumulation, manipulation, distribution visualized. For clarity, manipulation is the candle that breaks out. So you see in the wick of the candle, it's trading into the extreme of its previous candle range. It then retraces and closes inside of its previous candle's range. So it has swept. I'm calling it here a CRT high, but essentially it's the liquidity, the external range liquidity, the stops at this level here. Price then distributes to our targets, the targets being the low of the manipulation candle and ultimately the low of the candle that is manipulated, the accumulation candle. Why do M candles matter and what should you be looking for? So first and foremost, they trade into old highs or old lows. So in this case, it's a bearish candle. So we trade into the low. This then liquidates all the stops at this level and anything in here has been cleared out by this aggressive move lower. But what is also happening here is price is breaking out. So if you saw this candle when price was trading here, it looks like a very, very bearish candle. It's trading low. It looks like it's going lower. So what is happening? More traders are getting into the market with short positions somewhere in this retracement. So probably the last breakout, above the last breakout, orders are being accumulated within the manipulation. So first price trades into these stops, then reverses aggressively. Anyone that's getting short is now trapped in their position and they can't get out. The reason for this is that institutions want to trap that liquidity to then distribute into it. So it's all about manipulating money into the market to fill orders, large orders that can be distributed then in the opposing direction. So what does this mean? Manipulation is, and it becomes, the first phase of your execution. So most traders see breakout, highs or lows being traded through, and they're chasing into that momentum. They get trapped. CRT swing traders notice that price is being swept. They wait for lower time frame confirmation, which we'll get into. They trade the reversal. So manipulation is not a warning, it's actually your entry signal. So let's look at this on the charts. So if we look at the same example here, so we have our accumulation candle, which we've now covered in quite a bit of detail right here. I'll mark that in green because it was a bullish candle. So we have accumulation. We also noted in the previous video very quickly that this entire range of price action is actually a monthly candle, a monthly accumulation candle. For now, we're looking at the 2-week time frame with our 12-hour price execution. So we have this accumulation candle right here. So price trades aggressively into the low of the candle. Let me just quickly rearrange this so it's much clearer. So we have price trading into the low of the previous candle. Is breaking out. So when we see this right here, what do we essentially see happening from a psychological standpoint? What are traders looking to do? They're seeing this run, and what they're anticipating is retracement into internal range liquidity in this price leg to go lower, to probably go to this low, which we do actually get to, but actually to trade much lower, maybe down to here. So a lot of short sellers are seeing the opportunity here. And where are they putting their orders? So they're going short. Maybe they want to get involved. Well, we could have at the fair value gap, which we just get tagged into, covering maybe the high. So this is where money is starting to build in the market. Then price retraces in. We get a new sell-off. Then we get a bearish order block at this level here. So we'll get into internal range liquidity, but you see what's happening. Price retraces, it then makes a new leg lower. At this point, breakout traders are certain. We've seen reaction from internal range liquidity. We have a new bearish price leg. We have an order block. What are we going to do? We're going to get into short position. So I want to get in at the order block, and I'm happy to just cover the order block itself right here. And I want to get in for a short. Maybe I have like a 3-yard target or whatever it is. What happens? So it looks like price is going to go lower. And in this 2-week manipulation candle, what is happening? We're getting money now building, liquidity building at this level, and anyone that actually got into trades in this shift has their stop loss right here. And then you also have stops here, because what you see is this candle actually manipulated this candle. So it is very fair to say that a lot of traders, not seeing that this entire range is a monthly range, are getting into shorts. So there's all this liquidity building at these levels here. What does price then do? Well, it manipulates below these two candles, specifically this accumulation candle, and we get the first shift into the newly formed order block and then a shift higher. So let's walk through exactly what happens. So in this first shift, you see price trades straight into anyone entering at this order block, and there is very little chance to get out of your position. In fact, you basically get stopped out. So anyone there is stopped out. Then what we see is that we have a last sell candle before price then distributes higher. So this order block gets overran by new demand coming into the market at this level here. So we have the last sell to buy. We then get another sell into the order block, and then we can place long. This is your first opportunity to get long if you've spotted this, trading back to the external range liquidity here. That's a 4.4 trade. Price then consolidates somewhat before it then aggressively moves higher. We then see structure respected. So you get a new order block right there. So what does price then do? It attacks this high. And you see all of these highs just go very quickly as price just aggressively moves up. And it's just giving anyone short here no opportunity to get out. But how do we actually trade this? This is opportunity one, the initial order block. But you see, while that trade plays out, you get multiple opportunities to get involved. So as price breaks higher here, it leaves behind the order block, so the last sell to buy, but also a bullish fair value gap. So again, we'll talk about this in more detail on future sessions, but we have an inefficiency, a bullish inefficiency in price right here. So there's our next potential entry, entering from the inefficiency in price, covering the order block to, again, the exact same target. And that's a really nice, very easy 2.34R trade. And the whole point is you are now on the right side of the market. And this is going to come straight into my next video, which is on trading the easiest phase of price, distribution, because you see how fast this moves. Yes, we can trade manipulation, but this is our first signal. Distribution is then very fast price action to ultimately our higher time frame target, which is the high of the accumulation candle right here. So let's take a break now. We're going to go on to our next video, which is going to look at distribution candles before we get into more ways to execute on these trades.